I'm here with JPMorgan CEO and Chair Jamie Dimon in London on the sidelines of the Techstars Leadership Forum. Jamie, thank you so much for joining us today.
Thrilled to be here.
So we just saw a few tech companies go public: Instacart, Arm, Klaviyo.
Yep.
What's happening in the markets? Are we back, or is this a blip?
I think it's open for now. For different types of companies, but you see IPO markets like an accordion. I think there were like 400 plus deals in 21 and 40 in 22, and I think something like 50 or 60 this year. Obviously, interest rates change a lot, how people evaluate, whether they want to go public, the value of cash flows, so earnings and cash counts a little bit more than it counted before. But for now, it's open. Markets are healthy. The economy is still okay. So it's open. Maybe not for everybody, but it's open.
Given we're in London, you don't see the same wealth of tech companies that you see in Silicon Valley. They want more big star tech companies here. Why haven't we seen that?
Yeah, I think I look at it the other way around. U.S. was the center of tech, not just Silicon Valley. It's all over America. I recently came from, Boise and other places. It's staggering. But so the diaspora has actually moved overseas. You have some, I was recently in Berlin and Paris. There are tech startups everywhere now. They're quite good. They're more of a going public, and we're the leader of taking them public here. So I think it's a great thing. And obviously you always had it in China, a little bit in India. Still, it's not, in Europe, it's not quite like the United States, but the fact that it's here is a very good thing.
JPMorgan's tech footprint has gotten even bigger now that we've seen clients flood out of SVB. You bought First Republic. How big is the opportunity to be the new incumbent bank for startups and VCs? And how will you, Jamie Dimon, manage the risk differently?
Yeah, I think, first of all, we didn't want to benefit in the world by that kind of thing happening. So it wasn't good for banks or good for us. Having said that, when that happened, we had people working around the clock, literally, to open those accounts. I recently came from a Sequoia thing. I know a lot of the venture capitalists. Saturday, Sundays, through the nights to onboard these accounts and help them through it. And one of the great, and we always were there. We always did okay. I always want to do better. We're adding people. I think the biggest difference in Silicon Valley Bank, before I get to First Republic, is they did a great job at some of the stuff. So obviously there's certain things they did on a macro level which weren't right. They did a lot of things at the micro level that were right. How they dealt with the client, how they serviced them, they serviced them locally. So we have unbelievable products and services to bring to them. Digital, consumer, subscription lines, financing, globality, research, you name it. But we have to deliver to them in a way they actually like it and they want it, which is what Silicon Valley Bank did. So we're organizing around it. If you speak to a bunch of people here, you hear them talk about, we just took out a whole bunch of new space in Palo Alto. We hired John Chena, who's one of the top people out of Silicon Valley Bank. We're organized around the innovation economy. We'll get it right. I just want to make sure they're happy with us a year from now, not just today.
But what about managing the risk?
That's what we do all day long. It's for us, it's incremental risk. It's a slightly different kind of risk. So, and this happened years ago. Would a bank lend to a non-revenue company? Well, the answer, 20 years ago was zero, but we did Facebook. So we've learned how you can do that, when you do that. But again, the risk it's not the risk. It's the venture capital company. It's the venture capital partners. It's their investee companies. It's the investee companies' managements. It's that whole ecosystem. And so we're just organizing around it.
You've got a top-notch group investigating AI. What are they up to? What's the next level of finance you think AI can unlock?
Yeah, so I think the most important thing is that AI is real. We already have thousands of people doing it. Top scientists around the world, Manuela Velosa, who ran Carnegie Mellon Machine Learning. And it's a living, breathing thing. So people want an answer. What's it going to do? It's a living, breathing thing. It's going to change. There are going to be all different types of models and different types of tools and technology. But the way to think about it for us is every single process, so errors, trading, hedging, research, every app, every database, you're going to be applying AI. So it might be as a co-pilot. It might be to replace humans. Like, AI is doing all the equity hedging for us for the most part. It's idea generation. It's large language models. It's note-taking while you're talking to someone. And while it's taking notes, it may actually say to you that, here's the thing of interest the client might be interested in. All error, all customer service. It's a little bit of everything.
But it is going to replace some jobs.
Of course, yeah. But I look, folks, people have to take a deep breath, okay? Technology's always replace jobs. Your children can live to 100 and not have cancer because of technology. And literally, they'll probably be working 3.5 days a week. think. So technology has done unbelievable things for mankind, but planes crash, pharmaceuticals get misused. There are negatives. This one, the biggest negative in my view, is AI being used by bad people to do bad things. Think of cyber. Henry Kissinger talks about warfare. But the fact, and I do think, eventually have legal guardrails around it. It's kind of hard to do because it's new, but it will add a huge value. And for JPMorgan, if it replaces jobs, we hope to redeploy people. Like at First Republic, we've offered jobs to like 90% of the people. They accepted, but we also, we've told them some of those jobs are transitory, but we hire 30,000 people a year. Right. So we expect to be able to get them a job somewhere local in a different branch or a different function if we can do that. And we'll be doing that with any dislocation that takes place as a result of AI.
I want the Jamie Dimon forecast on the broader economy. Yeah. First it was hurricanes, and then it was storm clouds in your annual letter. What's the weather now? Is a recession
You guys
coming?
Have consistently got this wrong, okay? I'm not giving a forecast. I'm trying to, I blame myself, okay? The U.S. has been very strong for a while. No surprise, $5 trillion was pumped in fiscally, $3 trillion or $4 trillion of QE, and now that's being reversed. The consumer's still in good shape, they're still spending money, they still have more money than pre-COVID, it's spending down. Home prices have gone up for 15 years, asset prices have gone up for 15 years, they're in pretty good shape. And then the people are talking about deterioration. Credit is not deteriorating. Credit card all-time highs, not inflation adjusted or GDP adjusted or income adjusted. And yeah, it's deteriorating. We think it's normalizing. And corporate credit's been quite good. So you have a strong economy. That's the here and now. All the data is a little distorted because of COVID and things like that. When you ask the question about a forecast, and I don't make forecasts, I look out there and say, what are the range of outcomes?
From hurricane to storm clouds?
No, I would put it as several storm clouds. When I said hurricane, I was correcting. Someone said the storm clouds dissipate. I said, no, that one may be a hurricane. We don't know what it is. Here's what they are. There are two of them that are different than other things. So we always have, I don't worry about the weather, and I honestly don't spend a lot of time guessing about the economy. I mean, that to me is the sunny or rainy. I don't worry about that. We run the company to serve clients through thick and thin. That's what we do, to serve governments, to satisfy our regulators, and that's all weather. But there are two things which are extraordinary today, which may have different outcomes, and think of them as storm clouds. We don't know if they're going to hit, when they're going to hit, what they're going to do. Okay, so I'm not predicting that, but I'll tell you what I worry about. So one is the fiscal money being spent is so big, largest in peacetime ever, America and kind of around the world, with already very high deficits. And QT we've never had. So I know some people think QT will be uneventful. I'm not so sure. At a minimum, I expect volatile markets, and then you've got, and then all the long-term fiscal things are kind of inflationary. Oil prices, certain commodity prices, the green economy, the restructuring of trade, you name it, I see is adding to inflation, not subtracting inflation. So I don't think inflationary will be that, keep on coming down. It may not. And therefore, rates may go higher. But the biggest storm cloud is geopolitical. It's Ukraine, the humanitarian crisis. It's a war not far from here. It's along 600 miles, 500,000 people have been killed. It's nuclear blackmail. It's going to affect all global relationships in America and China, trade alliances. We don't know how it's going to start either. So I just put those two things as I keep a close eye on. And then how it affects the economy is different. And what I've been talking about that is, I just tell people, be prepared for higher rates and slower growth.
7%. Are we really going there? And how
I don't know. When I said 5%,
growth?
They said, are we going there? Yeah, it's possible. So when I talk to my board, I say, yeah, can it go to 7%? The answer is yes. Are there factors that would drive it, higher than, where it is today? 4.5, 4.6, or 4.7, over the 10-year bond now. Yes. Is supply and demand could push high? Yes. I'm just saying, be prepared for it.
So
and then the worst case is stagflation. Higher rates because you have a booming economy and there's a lot of competition for capital is not the same thing as stagflation.
What are the ripple effects of the stress of that 7% rates on business, on your growth?
Well, I'm not worried about JPMorgan. JPMorgan, we are prepared. We can handle 7%. We can handle 2% again.
8%?
Yeah, we can handle that too. That risk management is not the same thing as guessing the future. When risk management, look at the range of potential outcomes and being able to say to yourself, we can handle this, we we can handle this, we don't really expect it, and we can handle the in-between. If you bet your company on one outcome, so I think all companies do that. And every company's got different exposures, input prices, output prices. Some interest rates don't matter, some it's the price of mozzarella. So what's your business? Your business is different. So, but I think we don't know the effect of these things on the economy. So we may have a soft landing, we may have a mild recession, we may have a harder recession. Obviously there are potential bad outcomes. The worst one would be economically is stagflation,
right?
Where you have low growth, high interest rates, and obviously if that happens, you're going to see a lot of people struggling.
Where's China on the list of risks?
When I say geopolitical, that's the big one. It's the thread from Ukraine, oil and gas, food, migration, all our relationships. The most important one being China. That is the most important for the future of the world, and obviously Ukraine is affecting it. And in fact, it's very hard to see really positive outcomes with China until the Ukraine war is resolved. Hopefully, whether Ukrainians could say they have a victory of some sort.
You've said you're worried about another Trump presidency. How worried?
I don't know if I've said that. I'm hoping the American public, we need good American leadership. And I think that we need to explain to people why this is so important for the world. And so there's a little bit of this, America first, and no American president is going to say America second. But what we need to explain is why Ukraine is important to us, and why American security relies on global security, and why our allies rely on that. And if they can't rely on America, they will have to rely on someone else. And so I just think it's very important. Bob Gates writes in his book, The Exercise of Power, about the symphony of power. And it's all the soft things, not the military, which we've overused, but diplomacy, development finance, education, communication, and obviously economic, trade, investment, all those things, and I think we need a better job in that.
We just avoided another U.S. government shutdown. Now there's talks of a McCarthy ouster. Do you have a message for anyone in Congress?
Look, we need good policymakers. A shutdown is a bad idea. I'm grateful they came up with a solution. Democracies, by their nature, mean compromise. That's what a democracy is. So and there are a lot, when I go to Washington, you see on the press all the time the bad parts. There are also some great Congress folks, great senators who want to get things done in the interest of the United States. And I'm glad they did this particular one. Of course, with 45 days from now. And, Kevin McCarthy is the Speaker of the House, and I wish him the best. I've known him for many years. And he's got a tough hand. He's got a tough hand, but he's doing okay so far.
Regulators have proposed new capital rules that banks have said will make it tougher for Americans to get a mortgage. But I'm curious, when you look across the firm, what businesses are going to have the biggest impact? Break it down.
First of all, it's 1,000 pages long. So you have to go by product, by service, by country, by cross-border, by type. And then there's operational risk thing. So, I don't think it's all the right stuff. I don't think it's very comprehensive or well thought through. But let them do what they want at this point. And nor is it international. So you may not know, if you're an American, we have to have 30% more capital than European banks, the way it's currently constructed. What happened to the international requirements? Like, weren't we supposed to have international level playing fields and all stuff like that? When you get into the specifics, it really matters how the ultimate rules about mortgages and small business loans, et cetera. In general, it makes, what I don't like about it, for example, it punishes diversification, operating risk capital, and GSIFI. And diversification is one of the true free lunches for a bank that protects it. And I don't understand why they do that. And I just, we're going to be responding. Hopefully it'll be modified and thoughtfully done for international purposes. And mostly, America's got the best financial system the world's ever seen. And that includes hedge funds and private equity and private capital, all things like that. But this is, I say that private equity hedge funds are dancing in the streets. And this time they're being quite public about it, because this is going to push a lot of stuff out of the banking system. And if that's what the regulators want, so be it. Is that good for America? I don't know. We've gone from 7,300 public companies in 1996 to 4,500 today. Is that what we wanted? It should have been 14,000. Did you want a lot of credit to move private? Maybe they did, and then they accomplished their goals.
The biggest tech companies prop up a huge chunk of the S&P. Is big tech too big to fail?
I think that's a too broad a question. I think in any industry, you say too big to fail, which I've lost touch with what that really means anymore, because remember, car companies were bailed out, and these things were bailed out, and I don't understand. They should ask what they want. If the regulators don't want a bank to ever fail again, then we should do A, B, C, D, and E. If that's the goal. I didn't think that was the goal. I think Dodd-Frank actually accomplished most of the goals, which is dramatically reduce the risk, create liquidity, capital, stuff like that. So, and big tech, you got to be very specific. Sometimes companies misuse their position, and sometimes they don't. Sometimes regulators capture it, and sometimes they don't. But they're powerful. And we have to deal with that. I've been writing about, big tech. Going to our business, we got fintech, but we also have big tech, and they will embed payment systems in there. Some are going to white label banks, kind of what Apple did. They have the right to do that. I'm not against that. I would be against unfair use of their position to dominate us in a business.
Well, Apple is going deeper into financial services.
No
do you
question.
worry about the Bank of Apple?
I wrote about it. like 5 years ago.
Well, how worried are you now?
Like, what is a bank? Well, we're going to compete. So they have a tough competitor, but they hold money, move money. You can put money in basically markets, but it's a white labeled checking account, credit card, all these things. Yeah, they're a form of a competitor. We also partner with them, but I'm very used to partnering and competing with lots of people. So,
existential threat?
I don't think it's an existential threat, but I think if we were complacent about it, yes.
Jamie Dimon, we're here to talk about tech. I'll see you on stage. Jamie Dimon, Chair and CEO of JPMorgan. Thank you.